Saltfish? Good day today. I'm happy to hear so. And you guys, how was your day? You met your daily goals, JT? That's amazing. Okay. If it's a red day, it's totally fine. Remember, as long as you're following your rules, it's totally fine to have a red day. We all have them, right? Just took a parabolic reversal on Uber, which brought me back to green. Good job, Lou. Chopped up on SQ. Okay, let me see what SQ was doing at 129. Okay, I guess you had really tight stop losses and you were getting yourself chopped out, exiting on each new 1 minute high, right? Or maybe you got stopped out a lot somewhere right there. Yeah, I know how that feels. We'll talk about that, definitely. So okay, yeah. Good that most of you are doing well. Hey Mick. Let's start with the trade review. Then if you have time, I'll go through my trades, the winners and the losers. I do that like once a week. Every now and then, when we have time, trade reviews. For now, I don't have a lot of trades, so I guess we will have time to go through that. And if we have time, we will watch the price action together as well. So yeah, let's start there. SQ, whose trade was this? I think it was Ken. Yeah, it was Ken. And both of them were parabolic reversals, as he said, and he wants to know if those were good setups. So let's start with JD. JD is dropping down, it's getting extended from the 9 moving average in the 5 minute chart, and you are trying it for a parabolic reversal above a daily level. I wouldn't have taken this thing to the long side here. And anyone, would you tell me why I don't like this right here? It's not bad, but I personally wouldn't have felt really confident about it. It's looking more like a reverse ABCD. Yes, it does look like a reverse ABCD pattern, a reverse ABCD which I wouldn't take, but seeing it would make me cautious about taking this thing to the short side. Long wick, Ken. This right here, it looks decent actually. I mean, if you took it to the long side after a new 2 minute high, I'm not sure how this 2 minute high, 2 minute candle looked like. Right here, it wouldn't have been the worst and have a stop loss right there, but exactly right here at this moment, I personally wouldn't have taken it to the short side. Okay, so I wouldn't have taken it to the short side because of this. It's starting to descend below the 9 moving average on the 1 minute chart. You see that? Because it's descending, I mean, remember, these type of setups, they either work out immediately after you enter, they work out, or maybe they'll pull back, form a second bottom and then work out, or they just consolidate sideways, which you don't love to see, and we either exit at break even, at small loss, or we just ignore taking them. Here, it didn't work out immediately. It tried to form a double bottom, which didn't work out as well, and now it starts simply descending. If you took your entry right here, I would say that it's not bad. You're having slightly increasing volume at the low of the day, around the daily level. It broke it, came back up, small fake wick right there. I'm not sure how the 2 minute chart looked like right here, but let's say that this and this, they are forming a 2 minute candle, so it will definitely look something like a hammer on the 2 minute chart at the low of the day with an increasing volume. You take it to the long side on a new 2 minute high, put your stop loss somewhere right there, and you'll get stopped out on this candle or maybe this candle. After that, I'm not taking it unless it's giving me another setup. So yeah, if you took it here, it's fine, but since it's here, I would have simply I would have personally avoided it. Let's see your SQ trade. Okay, now if you took it off the 1 minute chart, I wouldn't have taken it off the 1 minute chart, and I guess I mentioned that. Guys, anyone, why wouldn't I take, or why wouldn't you take this thing on a new 1 minute low? Look at the 1 minute chart closely. Engulfing. One reason I don't take it after engulfings, but if I take it after engulfings, stop loss would be above the high of the body, right? We don't use the wicks. We use the high of the body on these kind of reversals, and I would just simply survive it all the way till I either get stopped out at break even, or I'll get stopped out on a new 1 minute high right here, because it did something similar to what we saw on PDD. It didn't work immediately, it didn't form a double top, it just started forming an ABCD pattern or an ascending triangle. I don't like seeing that, and I exit at break even. But there is another reason. Yes, exactly, Lou. You see, Remember, when are we taking those parabolic reversals on the 1 minute chart, and when do we take them on the 2 minute chart? If we see that on the 1 minute chart it's making higher highs and higher lows with no new fakes, the moment it's making a new low, that's it. That's a good entry. So you're having a daily level on the way, you're having a new 1 minute low, you take it to the short side and it's getting you stopped out. And that's it. After that, we're switching to the 2 minute chart. Okay? We're looking at this. If it's making a new 2 minute low, I'm not sure if there was a new 2 minute low. If it formed the new 2 minute low right here, and it formed the shooting star at a new 2 minute candle, and you took it on a new low, then that's totally fine and that's smart. But remember, they work out either immediately or they form double top and then they work out. The problem here is that after you enter, the stop loss was really tight, I guess. If it was a shooting star right there on the 2 minute chart, because you can see the 2 minute chart right here, and you put your stop loss a little bit above the body, this is the close, you get stopped out, it's totally fine, but I wouldn't re-enter again, right? It's either forming a double top before we entering, or it's continuing to go up and then dropping down. Don't try to get chopped in the same range, because it could just simply be wedging. You don't want to get stopped out one time after another, like one time, second time, and then a third time on one stock. If it doesn't work on this stock, just watch something else. There were a lot of opportunities for parabolic reversals today. I will go through most of what I've seen right there, but if it doesn't work immediately, then it's not really the best trade. Just continue watching it later. Overall, they weren't bad. It's not that they were horrible stops. They were good, not A+, but they were decent. AGG, make sure to post. Okay, you posted it there. I see that. I'll delete it from here, and perfect. So let's see Lenny. What did Lenny do there? Okay, I see the trade. And let's get there. No, it's totally fine, AGG, that happens. Okay, you traded NVAX and you took NVAX to the short side, Lenny. Was this a reverse ABCD pattern, right? And why did you get stopped out on this thing? What was your stop loss? I guess if you held on to it, you shouldn't have been stopped out at all, because it didn't even make a new 1 minute low. You doubted the trade and you got off the position, right? So it didn't get you stopped out, you just simply exited because you thought you made a mistake. Okay, so one tip I usually do for you, if I am in a trade, if I pull the trigger, then I take the responsibility for this and I follow my plan. Before you pull the trigger, you have a stop loss. It would be either above the body, either above the wick. Here I would like it a little bit around the wick because it's coinciding with the 200 moving average. It's the best technical level right there, especially that we are going into a reverse ABCD pattern with the parabolic pullback. And since you have your stop loss, you have your entry, and you definitely have your target somewhere at the low of the day or at the break of the low of the day. If you pull the trigger, you just hold on to it unless you see 3 reasons which are telling you to exit the trade. Before you take a trade, you think of all of the reasons why this trade might be good. After you take the trade, you start thinking about the reasons why this trade might be a bad trade. It works this way. I don't know why, but at least personally for me, before taking a trade, I try to convince myself that it's a good trade. After I take the trade, I start thinking that I did a mistake, this is not a perfect trade, and what am I doing here? Let me just exit because it didn't work out immediately. That's not the way it works out. It's just psychology whispers. It's something to definitely work on. And what saves me from this is the 3 reasons to bail on the trade. And what are the 3 reasons right here? You don't have any reason, right? You drop down, made a pullback, doji at the high of the pullback, new 1 minute low. Why would you exit at break even? A new high? Okay, 1 reason, no problem. Get to your stop loss, you exit right there. Let's say it dropped a little bit down here. It formed a hammer with an increasing volume. So reason 1, the double bottom with the second bottom higher than the first one, right? Second reason, a confirmation candle that this might be a reversal, a hammer. Third reason, increasing volume. Okay, I'll build on the trade, I'll break even. But here, the only reason you have is that it started going against you. It's 1 reason, right? No need to bail on this trade. Just simply hold on to it. since you pull the trigger. If you pull the trigger, just hold on to it. Remember the reasons which got you into the trade at the beginning. Right here, I see a pullback to a moving average cross, and I actually love that. I would never take it to the long side after a hammer on the 5-minute chart into a moving average cross, because I just noticed that a lot of times the stock is dropping down, pulling back to a moving average cross, and then it's continuing the drop down. If I see a confirmation candle like that doji right here at the moving average cross area on a new low, I would definitely like it more to the short side. Why I wouldn't like it so much to the short side right here is the hammer at the low of the day on NVAX. I don't take reverse ABCD patterns against hammers on the 5-minute chart. So it wasn't perfect, but it was good. It was a reverse ABCD pattern. It was into a moving average cross. You had a confirmation candle. I'd have the pullback, which is a doji. You had a new 1-minute low for an entry. Not good because of this hammer right here, but still not horrible trade right there. I would have liked it more somewhere around here. Why is that? This was the parabolic pullback, and then you're having sort of an M shape right there. Not bad entry right here or right here, but again, going against the hammer on the 5-minute chart, I'll be a little bit hesitant, but it will be only one reason why not to take it. I also saw that it respected it once, respected the second time. Why would I convince myself that it might be good to take it? Because first time it's bouncing out of the level, the second time it's breaking it. But definitely I would love to see a wide bar body candle right here, not a hammer. But still, this wasn't a bad setup right here. NVAX spready, I agree it is spready. Dardan, let's see what you did. You traded CCL and you traded Billy. So first of all, I can't see. Okay, I can see the trade. I can actually see the trade. So we don't see the trade on the 5-minute chart, or maybe, yeah, we don't see the trade on the 5-minute chart. It's a little bit there way before. This is the 1-minute chart. I can see the triangles on the 1-minute chart as well. I think you just have them active on the. Wait, something wrong. Do you have two 1-minute charts? Is this normal? Ah, okay. I see this. No, I thought maybe it's a mistake or you were messing with them. Okay, that's totally fine. So let's see what you did here on Billy. Is the blue line your 9-moving average, right? Yeah, the blue line is your 9-moving average. And look at these guys. If you just look at this time frame right here, we see that the 9-moving average is right there, and the entry point was at $46. It was somewhere down here, so the stock was extended from the 9-moving average on the 5-minute chart, which was decent for a parabolic reversal. Now we wait for a confirmation candle. I definitely wouldn't like a new 1-minute high so much, because we had fake new 1-minute highs all the way down. Why I would like this new 1-minute high is the breakdown below a descending triangle, and then it's immediately coming back up. Remember? Yeah, I agree with that, Meek. It's because we were used to the white background, but eventually it's everyone's preference, right? So look, remember why I don't love taking those descending triangles or reverse ABCD patterns on a stock when it's extended from the 9-moving average in the 5-minute chart? I don't love taking them because I'm not sure how much the stock is going to move after it breaks out. And this is an example. It's breaking out, not making a huge move. It will barely give you a 2R if this is your entry at the break and this is your target, barely a 2R, and then it's immediately coming back after against you. So if this was a 5-minute chart, an ascending triangle, stock is breaking up and then it's pulling back, I wouldn't love taking it to the short side here or here after the breakout. Why is that? Because the previous resistance on bigger time frames or on a bigger pattern which is forming usually turns out to be a support and then a trend continuation. In this case, I don't look at it this way. Yes, it was a support, it broke down and now it's pulling back, but I don't look at it this way. I don't look at it as if the previous support is going to be a resistance and then it's going to continue the downtrend, because this is way extended already. This is not a decent setup on the 1-minute chart. It's not a good play to take it to the short side on this setup, and it's definitely not a good play to take it short at the previous support because it's already extended. It needs to make pullback at one moment or another. And after such a small pullback, after this whole move right there, this new 1 minute high could be an exception for me to try to take it to the long side. So here you take it to the long side, or you wait for it to get back into the range, which is amazing, right? Remember, if the stock is getting back into the range after a breakout, it's not weak enough. Just for an extra confirmation, you take it to the long side here, put your stop loss, and the target in this type of setup is the 9 and the 5 minute chart. It's not bad that you didn't hold it all the way to the 9 and the 5. I'll share with you guys my trades as well. I know that on my rules, or following my rules, the target is usually the 9 moving average and the 5 minute chart, but it's tough to always hold it to the 9 and the 5 when you are on the green. You took a lot of partials right there. The last of them I see was at 47.10. This wasn't a bad trade. It was really good, and really good entry right there. Hey Ash, we do this every Tuesday and Thursday. Oh yeah, thank you, Anne. We all need to work on our partials. We know that, but it's eventually psychological matter. We need to develop that good habit of holding, and I'm still working on that. It's really tough. Now let's see what you did here. CCL, it was also a reversal. Do you usually trade reversals, or you trade other setups as well? And do you have only one of your favorite setups, or you have many setups you like to trade? Just reversals. And how long have you been trading reversals? This is really good. It's good to have one setup and then continue working on it 4 months. And is this live trading or simulator? I mean, there is nothing bad about it, whether it's simulator or live. We are still learning, but yeah, you are doing really well. Good job. Okay, so you traded CCL to the long side, and that was around 1490, somewhere at the bottom. This was really close to the bottom. That was amazing. So you see that it's starting to get heavier right here. This is not one of my favorite setups. I don't like it so much for my setup. But still, it's not bad because you see it's dropping down so fast right here, and after that it's starting to get heavy. It's breaking down, but each breakdown is just making a few cents move, and then look at this. You're having a fake breakdown wick, so it's making sort of a reverse ABCD pattern. It's breaking down, gets bought immediately back up, and then it continues consolidating in a range. Right here you see that it's actually downtrending, making lower lows and lower highs in the 1 minute chart. And then the last 5 minutes, you could see that it's actually starting to change the trend. It's making a mini ascending triangle for a breakout with higher low candles. Once it broke this pattern right here, this small pennant right here, right? This is like the turning area where it's actually starting to change the trend. Right here, it was still downtrending, right? And going to the upside, dropping down, going to the upside, dropping down, and then it's just starting to get tighter and tighter and tighter in range until it's going to explode to one of the two directions. At this area you are having lower highs, right? And now it started making higher lows. You also, if we zoom it in, let me zoom it in actually, you could see that it started making a higher low waves. Let me zoom it down right here. You see, this was the low right here. It came back up, it dropped down, and it started forming higher low waves. While there, look at this, it was making lower high waves. Right? Lower high, lower high. And then finally, it started doing the opposite thing. It started changing the trend, right, in the 1 minute chart, and he's taking it right at the break of this pennant area right here. It's really good price action reading there. Yeah, so you are taking it to the long side. Stop loss could be either at a new 1 minute low. You could be a little bit more safe and put your stop loss somewhere right there. And then it's actually, yeah, it was also a volume spike. I didn't notice that. Thank you, Mick. Look at these guys. Finally, it's breaking this pennant right here with an increasing volume, and he's catching it right here and then just starting to partial all the way up. Really good job there. No, it didn't used to be every day even. It was always 2 days per week. So yeah. Let's see this. So Goncalo is wondering if you would approve long setup with a break of $241 on Facebook. Probably too early of an entry. So he's asking if this setup right here, this right here, right? I'm not sure if Goncalo is here. but I'm not sure at what time exactly he wanted to ask it about. But yeah, if he's mentioning, I guess it will be somewhere right here. This is daily level, $241. If you want to take it for the break of $241 right here, I wouldn't personally like it. Why is that? Because it already did a huge move, and we don't want to get into the long side at the breakout area, at the place where those people who got in early at this accumulation stage are going to take their partials. So yeah, you don't want to get in long when those early people are taking their partials. Now after the pullback and it's starting to come back up, you could see that it's forming an ABCD pattern. Not my favorite ABCD pattern, but along with this ABCD pattern on the 1 minute chart, you are having another setup. What's this setup here, right here, guys? It's a bearish engulfing sandwich. Why bearish engulfing sandwich? Because the bearish candle is being engulfed from both sides, right? You see that the bulls one right here, bears tried to short it down here, they couldn't even drive it to the new low, and then the bulls are coming back up and they are breaking the high of the candle. This is what we see on the 5 minute chart. Now that we see a setup on the 5 minute chart, we try to get an entry on the 1 minute chart. You see an ABCD pattern on the 1 minute chart. You could either take it to the long side here. The problem is the stop loss will be so far, so I don't really like it to the long side at this area, and we are so close to the high of the day. It could just simply form a double top, and then this candle is still not closed, right? It could just close it anyway. It could just simply get sold off and make a new low, and this would not be anything even close to a bearish engulfing sandwich. But at this candle, I think it would be better. Yes, this huge move, but it's not the third candle, right? It's within the first 5 minute candle. If this break of the high of the day was on the first candle, second candle, and then the third candle, I wouldn't take it on a third candle because it's breaking my rule, which is telling me don't get into the long side on a third consecutive candle, and don't go short for a breakout or for a trend or whatever on a third consecutive candle. Here it's the first candle. On the 1 minute chart, it's only the second candle. It's breaking the high of the day, which is good on a setup above a daily level, and you could put your stop loss at a new 1 minute low or half candle, and then just simply ride it all the way up there. So yeah, this wouldn't have been a bad setup at this area right here. Right here, it definitely wouldn't have been really good to take it because it's just going up and it needs to do a pullback, right? It's a fourth consecutive candle, which is breaking my rule, and it's a place where people are going to take their partials. Yeah, exactly, Zen. You took the pullback, but difficult to find a stop. So it depends where you took this pullback. If you take it to the long side here or here, the closest stop loss is this area. You can't put your stop loss within the 1 minute candle, right? You can't put it anywhere within the 1 minute candle. This is the best stop loss to have. If you take it anywhere in this candle, if you take it at the break of this candle, still the stop loss should be at least half of the candle for a momentum play. Better the low, but this is like too much, right? The risk to reward would be horrible. It did reach it eventually, but you don't never know if it's going to reach it or not. If you're taking it at the break of the half of the day, and remember, after the break, stock usually they either run or they make a pullback to the previous resistance area, act as support, and then they continue the uptrend. And look at this here. After the breakout, it actually pulled back the pivot point. I'm not sure if it even continued working out after that, but you could see that at least it started like getting slower. No, it's actually not even close to that level. So yeah, my apologies. But yeah, after the breakout, stocks they either run out or they pull back to the previous support area. Retest, you could add right there and move your stop loss to the previous pivot point right there. Avi, let's see what you did. And then we have Jonathan. Perfect. So I've traded high of the day breakout, I guess, right? Now this is not bad. Like if you take it to the long side here at the break at this area, I wouldn't like it so much. Why is that? Because it's already like so much extended, and it could simply form a double top with the second top higher than the first one, a fake breakout, and it would need to do a pullback eventually, right? But here we're having a setup, and what setup do you guys see? It's not a perfect setup, not an A plus setup, but there is a setup. Anyone seeing a setup right here? ABCD pattern? Yeah, it could be an ABCD pattern. Definitely, theoretically, there is an ABCD pattern, but something else, something stronger. Head and shoulders, I wouldn't say that this is a head and shoulders here. Like, you could say that this is shoulder, then this is a head, but this shoulder is not fully formed, so we can't say that it is a head and shoulder. But yeah, right here is the ascending triangle. Yeah, exactly. Zen, Lo, Charles. Yeah, this is an ascending triangle. Why is it an ascending triangle? One touch, second touch, third touch. From the downside, one touch, then it's going up, it's pulling back, second touch, going up, pulling back, third touch. Right here, we're starting to see an ascending triangle forming. So we could either get an entry as close as possible to the support at new highs with the stop loss at the low, right? You could get in somewhere in between, somewhere below, before the breakout with the stop loss somewhere at new low. Or you get in at the breakout for the ascending triangle with the stop loss in your 1 minute low, since you are getting in for the breakout. And I see that this is what Avi did. Didn't take it to the long side right at the breakout, waited for it to hold it, and took it on a new high, stop loss somewhere right there. And look at this. This is good patience. You took it at your partial at the high of the day. Salim, I'll explain the head and shoulders right now. Now this entry right here, I wouldn't have taken. Like here, it was perfect, right? It was a break of the high of the day with the ascending triangle. But here, it's a break of the high of the day with the same thing happened here. Remember what we said? We don't want to take it to the long side at the break because it could just simply be a double top, or it could just be a double top with a fake breakout. Exactly what happened right here. It's going up, pulling back, it's breaking the high of the day with a fake breakout, and then getting you stopped out. It wasn't just simply ready. Along with that, I'm not sure how the 5-minute chart looked like, but it looks to me that this move is going straight up, right? This is a huge move, small pullback, huge move, small pullback. It's looking parabolic to me. Let's see how it looked like on the 5-minute chart. And if it's parabolic, it would be another reason why I wouldn't like it to the, oh my god, I closed Jonathan's chart. But yeah, we'll get back to it. Uber, it was around 10 o'clock. You see guys, another reason why I wouldn't really like it to the long side. It's going extended from the 9 moving average on the 5-minute chart. This is the 10 o'clock, 10, 10, 5, right? This is it, 10, 10, 5. It's looking like an ABCD pattern for the break of the high of the day, and this is why I don't love these ABCD patterns when they are extended from the 9 moving average on the 5-minute chart. It's looking like an ABCD pattern on the 2-minute chart. You see confirmation candles, a hammer, you see a new high, you're happy, you're getting into a good setup, but a good setup which is really extended, right? You don't want to get trapped in there. What it does, fake breakout, and then it's dropping down. This wasn't actually a bad setup to take it to the short side if there were confirmation candles. I see setup right here. It's not it's a double top with the second top higher than the first one. I wouldn't like it because of this candle right here on the 2-minute chart. It looks good, not perfect, but it's decent. If you take it to the short side on this setup, it wouldn't be the worst. Now Salim, the head and shoulders, it's a reversal pattern, and it looks like a head and shoulders pattern. This is the head, and these are two shoulders. What does this setup tell you? It's telling you that the stock was strong. It made a move from A to B. It did a pullback, which is C, right? Then it made a new high, which is D, and it's showing you that the strength is continuing. Now, normally, if the stock is strong, let me actually draw it normally. If the stock is strong, it's going to do a pullback and it's going to continue trending up. It's going to pull back and it's going to trend up. But if it's not strong, it's going to pull back. It will form you the ABCD pattern. The breakout will not be strong. You see, like this is a shoulder. It was so strong before, but after the breakout, the move wasn't so big. It's just simply small move right there, and it's trying to pull back. Now remember, at the breaks of the high of the days, what do we want to see? We want to see stock either shooting up, which didn't happen here, or we want to see that the previous resistance acting as support. If I see this, I wouldn't really call it a head and shoulder pattern, even with this shoulder right here, right? Because it's still holding above this level right here. Now, if it's getting back down into the range, you see that this is a weak sign. It's telling you that the stock is not strong. It broke the high of the day, but it came back into the range. This is not a good sign right here. Now, it still doesn't mean that the stock is going to reverse. stock getting back into the range it means that it's weak, but it still doesn't mean that it's going to reverse. Now you want to see what's going to happen right here. It's coming back up, which is good. Would I take it to the long side right here? I wouldn't. Would I take it to the long side here? Maybe, because at least we're having a setup. We don't see that it's weak, we see that it's strong. But here I see that it's starting to form a head and shoulders pattern. I want to see what it's going to do right here. It's either forming the second shoulder, starting to drop down, you take it to the short side, or it's going up, starting to form the second shoulder, forming a higher low level, and then you could take it to the long side. Why is that? Because it's showing you that it's not actually weak and it's making higher low waves. Sellers tried to push it down, they failed. Tried to push it down on a setup, but they failed, and it came back above the second shoulder. You could take it to the long side here, but definitely not here, and definitely not here. Now let's see Jonathan, and then we have Ivan. So Yash, yes, I did trade WKHS. It was a losing trade. I'll share it with you. But right after we're done with the reviews here. So tried to play the bounce, but got subbed out when it dropped off. So stock made a move from A to B. It tried to pull back. You see that it's making lower waves. It's making those buying pressure wicks. At the same time, it's making lower wicks. Now here I'll be a little bit careful. I mean, it's not bad that you look it to the long side, and I would definitely like to the long side as well. But the stop loss, we are still in a range, right? And in this case, I think I would have used the stop loss at technical level or at the wick just to give it some room. I wouldn't use the low of the wick as my stop loss. Why is that? Because I see that the stock is wicky. It's not trading clear bodies with no wicks or higher highs and higher lows. Reading the price action before, you see that it's actually wicky, and having a tight stop loss right below the body isn't the greatest idea. You can't take it to the long side here and put your stop loss at the low of the body. It wick there, it wick there, it wick there, it just wicky. It could simply wick and form a higher low or lower high, whatever it's direction you want to take it. Now you see that it's actually holding, it's holding, it's holding. You want to take it to the long side. It's breaking up, you take it to the long side. You can't have your stop loss at the middle of the wicks. Like reading the previous price action, you see that it's wicky and you need to put your stop loss at least at the low of the wick right there. Now, if you did that, you'd definitely survive and you'll catch the move, right? And after that, you could always just tighten your stop loss and add to your position. You get in earlier, you have a wide stop loss, it's starting to break the high of the day, add to your position. Move your average to be somewhere right here or somewhere right here, and move your stop loss to be a little bit there, and just go with your partials right there. You're welcome. Terrence, I'll take a look at NKLA once we're done with the trade review. Or we'll read the price action together after we're done with all the trades there. SQ. So let's see what you did there, Ian. Exited on a 5-minute low. So your exit was a new 5-minute low. But view up and the 9-moving average were just below it. Ended up bouncing off those levels and resumed the trend higher. Could I have re-entered on a break above the hammer at view up? We'll take a look at that. Or the one after the W shape formed at the 1-minute chart 20 EMA 4 minutes later. So let's take a look at this. SQ, I think it's being traded at all-time high, right guys? Or I'm wrong? Yes, it's being traded at all-time high. Now remember, for ABCD patterns, I have 2 golden tips. One, it's so easy to get in, or it's way better to look for an ABCD pattern to the long side when the stock is trading at all-time high, and it's easier to get into the ABCD pattern for reverse ABCD pattern to the downside when the stock is at all-time low. It's a little bit difficult to catch a reverse ABCD pattern, ABCD pattern to the short side when the stock is at all-time high, because I mean, who would short this thing, right? It's strong, there are no levels to short it from. You could take it for micro moves inside there, but when the stock is at all-time high, I definitely will not be hopeful to get a really huge move to the downside. When the stock is chopping sideways on the daily chart, you could take it either to the long side, either to the short side, depending on how much it moved intraday. If it's at the average true range for today, so it's being trading right here, and this is the most the range it could maximum be traded at. I wouldn't take an ABCD pattern inside this candle for the break, because it already did a move above the average true range. Now let's look at this. Stock is breaking the pre-market high, opening up, breaking the pre-market high. What do you guys see after that? It's pulling back, and the previous resistance is acting as a support. That's what we want to see when there is a breakout happening, right? We don't want to see it getting back into the range. We want to see that the previous resistance starting to act as support, which happened right here. It held it, and you take it to the long side at a new high. When the stock at all-time high, you could definitely, you could risk it and take it ABCD patterns after a parabolic pullback. Though I personally don't do that. I usually wait for a W shape, which we could see a little bit right there, right? I mean, it's going up, it's dropping down, then it's making a W shape here on the 5-minute chart. So could take it to the long side somewhere right there. But still, this is not a bad step, and it's actually good. So you're taking it to the long side, you start partialing all the way up, right, at the high of the day, and then at the levels, and then you exit at a new 5-minute low. I personally wouldn't have exited at a new 5-minute low. Why is that? Because I know that stocks, when they are trending, they do make pullbacks to the 9-moving average in the 5-minute chart. They get extended, they pull back to the 9 and the 5. They get extended, they pull back to the 9 and the 5. They get extended, they pull back to the 9 and the 5, or eventually they might be reversing. I wouldn't like it right here, because this is like already the third leg, right? Or maybe the fourth leg. On the 1-minute chart, this was the first leg, but let's say that this is, yeah, this is actually the first leg up, second leg up, third leg up. I wouldn't really call this a first leg up. If we just draw waves with lows, highs, lows, highs, lows, this would be like the first leg, the second leg, and then third leg for reversal. But you could say that this was the first leg, I mean, because it is, right? Anyway, I wouldn't have exited here unless it actually broke the 9-moving average and started going lower. I would give it even a few cents below that. Now, would you be able to re-enter into this thing at new highs? You could enter after the hammer right here. I would be afraid of one thing. It broke the high, then it dropped down, and now it's forming a head and shoulders pattern. You see? So taking it to the long side right here, I would be a little bit hesitant. You could do that because the stock is at all-time high and it's really strong, right? But again, now it's forming a setup. It's forming a head and shoulders pattern, and I want that pattern to be broken. And when does it get broken? Right here. This pattern is broken. You could take it to the long side right there and put your stop loss below the waves right there, and then just ride the trend all the way up. I entered at the second doji at the W shape. Second doji right here. Loom. Yeah, this is not bad. This is good, because at least you see that the pattern is starting to fail. It's still not failed right here, because it could have just simply made a lower high, but still it was decent and it was good, especially that the stock is at all-time high. I do this exact trade, the same entry and the same exit. Did you take it here, Ryan? I know this is your style. Yeah, good job. Did you exit the last partial as well on a new 5-minute low? Yeah, I mean, it wasn't bad. It was a decent trade. Good job. You also took the reversal. Did you take it to the short side? Since when are you trading shorts? Oh, the first long right here. Okay, I was surprised because I know that you're trading only long. So yeah, this is not bad as well. Looking at it right here, guys, it did drop down. It made a new 5-minute low, but then it immediately got bought back up into the range, right? So this is not a bad long right there, especially when it started squeezing above moving averages and above VWAP. Okay, now let's see the next trade. Oh, I didn't open the next trade. Ivan, I think we watched this. So we have Valentin, and then we have ADG. Why can't I open it? Okay, I could. Valentin, then we have ADG. Guys, if I miss any trade, make sure to tell me. I could skip it by mistake. Okay, so this is, let's see what you did. You traded the reverse ABCD pattern. This is not a bad reverse ABCD pattern. You also have a mini head and shoulders pattern with the direction of your trend. You also have a W shape. You could call it a W shape if you don't want to include the shoulder. Again, with the direction of your trend. And you have confirmation candle on the 5-minute chart below the 9 moving average with the direction of your trend. Taking it to the short side right there. Stop loss above the wave. That's where I would have put it. You could have it wider if you want. Still not a bad stop loss. And then partial closer to the low of the day. This is... yeah, this is not bad partial, I mean, to be honest. But the problem is you partial right at the 9 on the 5-minute chart. Remember, if you took it right here, I would say it's fine because it's at the low of the day. It made a fake breakdown, closed as a doji and made a new 5-minute high. You don't want maybe to give 10 or 20 cents back all the way to the 9 on the 5. So you would take an earlier partial. But taking a partial exactly at the 9 on the 5, that's something I wouldn't have done. Why is that? Because I know that stocks, they usually pull back to the 9 on the 5. Sometimes it's closer to the 9 on the 5. Sometimes exactly to the 9 on the 5. Sometimes it's swicking a little bit above it and then it's continuing to go down. So yeah, I wouldn't have taken the last partial right here. Since I'm already at the 9 on the 5, I just see what it's going to do. You also have this moving average right here, the 50. I think I would have just put my stop loss at 390 above the 50 moving average, above the 9 moving average on the 5-minute chart, just as a precaution. This is panic cover I see, and this is a panic cover right here. Overall, the trade was good and I love how much you held on to it. These pullbacks right here, they didn't scare you, which was really good. Okay, let's see ADG. This is your trade, right, ADG? Valentin, sometimes I would let it close above it and wait for a new 5-minute high. Sometimes I look at the 1-minute chart or the 2-minute chart just to see the other moving averages. Like on the 5-minute chart, I see that it's weakening above it. On the 1-minute chart, I see stronger support a little bit above it, the 50 moving average. And the 50 moving average is a really strong support most of the time. So I would have used the 50 in that case just to give it an extra room above the 9. It's so rare that I wait for the candle to close. I honestly, yeah, maybe 1 in 20 times I wait for the candle to close above the 9 and the 5. And I do that only if I don't see any other level above it. If I see moving average, maybe 50 on the 1, 200 on the 1, 200 on the 5, I don't know, 9 on the 15, whatever moving average is there, I will try to use that next level as my exit signal. AG, my question was regarding the pullback and why you think it did not work. You already explained it. This one right here, AG, this was short, right? Or you took it to the long side, stopped, long side, stopped. Okay, so you took it to the long side here, which is not bad. I see this is actually like similar trade we talked about, if I'm not wrong. You take it to the long side, you're surviving the pullbacks. This is a really good signal to partial right here. And I see that you exited right here because it formed a parabolic reversal, which was really smart, right? Then it's dropping down, bouncing, and I wouldn't take it to the long side the first time. Why is that? It's a parabolic drop and I want to see a W shape. Now, if it's making a W shape and new high, I would take it to the long side. If it's not doing that, I'm not taking it to the long side. So not taking it to the long side on the first new high after a parabolic drop. After it's forcing itself into the 9 moving average on the 5-minute chart. Then it's dropping down and it's making a new low and you're getting into the long side. Remember, we don't get into the long side on new high after a parabolic drop. We want to see a W shape. And here it's already a reversal, but at least here you're having that W shape and you're having the higher high and higher low. So this would have been one of the best levels to take it to the long side. It's above the strong moving average, above the daily level. It was a huge drop with no decent pullbacks in the 5-minute chart yet. Small double bottom on the 1-minute chart, not a bad long right there. All those patterns right here, they were reverse ABCD patterns, right? I know that you look at it as an ABCD pattern, but this is why we don't take the ABCD pattern to the long side on a new, on the first new high, because it could just simply start forming a reverse ABCD pattern. And this is why we want to wait for a W shape. Later on the day, After 10:30, I prefer to see the blue shape on the 5-minute chart. So it depends on the pullback, the parabolic pullback. Was the parabolic pullback on the 1-minute chart or it was on the 5-minute chart? Let's say the stock is going up, okay? Then it's dropping down. Look at this. This is only one candle, only one 5-minute candle. And let's say this is 1, 2, 3, 4, 5, okay? Now the next candle is opened. This is so ugly. Anyway, dropping down and making a new high. Now I see it dropped only one candle on the 5-minute chart, but it dropped around 1, 2, 3, 4, 5, 6, 7, 8, around 8 candles on the 5-minute chart to the downside. And now it's making a W shape on the 5-minute chart. Look at this. It's not a parabolic pullback on the 5-minute chart. It's only one 5-minute candle low. That's why I would take a W shape of the 1-minute chart. Now, if it's something like this, now this is the 5-minute chart, okay? And it's dropping so much on the 5-minute chart. It's not only one candle on the 5-minute chart. If I see a W shape on the 1-minute chart somewhere down here, I wouldn't really like it because the drop was so much on the 5-minute chart. I would love to see a W shape on the 5-minute chart in this case. You get it? So if the drop is so much on the 1-minute chart, parabolic on the 1-minute chart, but on the 5-minute chart it's not so much, it's only 2 candles, you can't hope to see a W shape on the 5-minute chart. It's enough to see it on the 1-minute chart. If the drop is so much on the 5-minute chart, then maybe you'd want to see that W shape on the 5-minute chart. Okay, perfect. Mick, let's see what you have. Then we're having glue. So Nick traded WKHS to the long side. Now this thing I wouldn't have taken it to the long side right here. Close daily level. If you take it to the long side here and this was your stop loss, this is basically 1-to-1 trade, and I don't go in for less than 2-to-1 trades. If you go for 1-to-1, then it's not bad. I see that it made an ABCD pattern, sort of an ABCD pattern right here. But on the 5-minute chart, this was a really huge candle right here. It's a 5-minute open range breakout when it's a little bit far from the moving averages, right? If you use VWAP as your stop loss, it's just that the risk to reward isn't there. The pattern is not bad, but the risk to reward isn't there. And if the risk to reward isn't there, I just try to avoid it. This is amazing. This is really good. And this is, guys, what is this setup right here? You could look at it 2 ways. But anyway, let's take a look at this only. So what do you see here, guys? Engulfing crack. Exactly. What's an engulfing crack? Stock is squeezing the shorts right here. People believe that it's long, try to the long side, then it just engulfs it and gets back into the original trend. Now that's not enough. We want to see the crack of the engulfing, and that's it right here, with a small reverse ABCD pattern on the 1-minute chart as a confirmation below the moving averages as a resistance, which is good. You know where to put your stop loss. So you are having a setup and you know where to put your stop loss looking at the smaller time frame. Looking only at the 5-minute chart, you could use the high of the week right here. You could use VWAP, you could use the high, but this is like so much. Looking at the 1-minute chart, you're having a defined stop loss right here. So you could use this as your stop loss, get your entry, and then just go in for the risk to rewards. You added right here something I wouldn't have done. Because it's already like the 3rd continuous candle and I'm afraid it might do a pullback, and because I added right here, my average became somewhere right here, or maybe somewhere right here. It will just get me stopped out at break even. Yeah, so I don't take it. I don't usually add on 3rd continuous candle, but still, I mean, it looked good. The wicks were to the downside. It's not a bad thing to do. Partial all the way to the daily level, and then this is a place where you actually flipped it. This is smart. I want to say that this is the place where I'd actually exit all. Why would I exit all? Extended from the 9 and the 5. Daily level, sort of double bottom with the second bottom higher than the first one. New high, this is a parabolic reversal. It's a sign for me to exit my trend trade. And it was a sign for him to actually flip the position and take it to the long side with a target, the 9 and the 5 and even above it. I took WKHS, I took it here to the long side and it got me stopped out, unfortunately. I used the 2-minute chart right here. But it did eventually work out. I'll share with you my trades, guys, but yeah, I took it to the long side right here. I assumed that this was a fake breakdown, slightly increasing volume, daily level, new high, getting back into the range, which is a weak sign. I took it to the long side here and I got stopped out. I didn't re-enter there, but yeah, this was a really good trade. Yeah, it was called on the scanners. That's why I actually was looking at it. But unfortunately, I caught it on the wrong time. So we have Lou, then we're having Eric. Eric. Okay, this is it, and this is it. Then the multi-strategy scanner. So let's see here. What did you do, Lou? You tried to take this thing to the short side for a parabolic reversal. This was SQ. It was extended. Now, this is the 1 minute chart, and I wouldn't have taken it to the short side on a new 1 minute low for one reason. Fake new 1 minute lows earlier. Fake new 1 minute lows earlier. And fake new 1 minute low here. But I like the increasing volume. New 1 minute low, you though got stopped out. I would have used my stop loss at this week right here to give it extra room, and I guess I would have been stopped out as well. It did eventually go closer to the 9 and the 5 as well, but this wasn't bad. I mean, you take it to the short side on new low, you put your stop loss a little bit above the wick, and you get stopped out. Everything you did there, it was good, but it didn't work out at the same time. I think it worked out just a little bit later. But yeah, this wasn't bad. Yes, then you can email me. I'll send you the link directly to that scanner. It's really good to have it with voice alert, because most of the time that scanner, the reversals on that scanner, they do work out, at least for now. And guys, if anyone is good with scanners, I can send you the settings for the scanners I have right there. Maybe you can modify it to work a little bit better, because no Ray, I do them on Tuesdays and Thursdays, 12 p.m. Eastern. So Eric, what do you do here? You try to take it to the long side, and this is something we usually advise not to do. Don't go in with the trend on lower when the stock is dropping down, right? You don't know when is the end of the pullback. So the stock is going up, it's pulling back. You try to catch it a view up, assuming that this is the end of the pullback. But what's happening? It's making a new low. Then you are trying to catch it second time, and luckily this time it worked out. But what it could do is just simply make a new lower low, lower high, and get you stopped out. Then you might try it of the previous day close, and it will just simply drop even more. What is the end of the pullback? The end of the pullback is the moment that the stock is going to form a new high. I mean, that's like the easiest way to define it. That's not enough a lot of times, but that's the easiest way to get yourself saved from a lot of chop. The end of the pullback is the moment that the stock makes a new high. The end of the pullback is the moment when the stock starts making a new low. Then you get into the long side and you start partialing all the way up. And when you take trades, buy or sell, do you take it via montage or with hotkeys? Turtle, I use the hotkeys, Kyle's hotkeys. 12 p.m. 12 p.m. Eastern, Tuesdays and Thursdays. Similar to today's time. Yes, Sebastian, you can submit trade. Hopefully we'll have time for it. I think we'll have time for it, yeah. You can submit. I think one trade because we are running out of the time, but yeah, one trade you can still submit it. SQ was at the daily level and increasing volume was there. That made me take the trade despite false signals before. Do you think I should still avoid the trade? No, if you have extra signals which are telling you that you could take the trade, increasing volume, daily level, those are signals which are telling you to take the trade. Overall, you try to just look at the bigger picture. I think it wasn't a bad trade. I personally love to see a perfect setup. I don't take setups which are a little bit making me hesitant, or which are making me a little bit hesitant, because I know that later there will be a perfect setup, and I'll share all my trades with you like quickly in a minute or in a minute and a half without going into much details there. Twitter, not a bad trade. 15-minute open range breakout right there, and it's small ascending triangle on the 1 minute chart for the break of the high of the day. Confirmation candle on the 5 minute chart. One thing which is why I would have been a little bit hesitant, because this is a third continuous candle. It's slightly far from the 9 and the 5. Not the worst setup, definitely not A+. But why don't I like this type of setups? Because most of the time when they break out, when they are extended from the 9 and the 5, they simply make small breakout, fake breakout. I'm not sure how much they are going to move after they're breaking out. Here it's breaking out, but the move, let me zoom into the 1 minute chart. Here it's breaking out, but the move is really small, and it could have been even smaller, and it could have been just a fake breakout. Look at what happens after in the 5 minute chart. It's pulling to the 9 moving average in the 5 minute chart, closing above it, forming a doji. Now this is a good place to take it to the long side. Here it was third continuous candle, which is why I don't love to take it to the long side. It was extended from the 9 and the 5, fake breakout right there. Now it's pulling back to the 9 and the 5 for an ABCD pattern. You take it to the long side on a new high. It's the first candle, and this is the move which you wanted to get right there. Remember that the increasing volume on the way up is called the climactic volume, which is signal for a reversal, right? If you see an increasing volume, the stock is making an ABCD pattern, and you see that increasing volume is here, that's a good sign because it's showing you that the stock is going to start to move. If that increasing volume is somewhere up there, it doesn't mean that it's a good sign for a trend continuation. It's actually a good sign for a reversal. Yeah, perfect. Adham, let's see your trade, then we'll see what Ivan did. So Adam traded plug to the, I'm not sure what is this. Is this long and a stop out and then a short and a stop out? No, it's totally fine. Just let me make sure I understand it right. It's a long and a stop out and then a short and a stop out, or it's like short stop out, short stop out? You want to ask about the clock? What's wrong with the clock there? Oh, the stock. Why did I read it clock? Okay, I see that. So you took it to the short side and you did the same thing which you talked about in the beginning, right? This is not the end of the pullback. The end of the pullback is the moment it makes a new low. So it's making a pullback right here, still no new low, higher high, higher low, and then this is the new low. So this is the end of the pullback to the upside. If you take it to the short side, make sure that it's starting to change the trend. You don't want to catch the high of the pullback because you never know what is the end of the pullback, if it is a pullback and not a reversal. Okay, the best time to take it to the short side, let's see the 5 minute chart. It's pulling back right there. It could be here on a new 5 minute low, here after the M shape, somewhere right there. And if you are really late for it and you want to chase it, somewhere right here wouldn't be bad because it's forming a descending triangle. This candle right here, it's forming a descending triangle. This candle right here, this is a fake weak breakdown, You could take it to the short side once it's starting to break down, either here or here or here. So all those places which I'm marking right here would have been good entries to the short side. But remember, you need to get in to the short side. You have daily level right here, a confirmation candle at the top. You need to get in on new lows. Don't try to get in on the way up because you never know what is the end of the pullback. Okay, this is a similar trade. Apple, I guess, all-time high, going up, pulling back, holding view up, new high, getting into the long side, which is really nice. Starting to form a bearish engulfing sandwich. You're getting into the long side, and I love the patience of partialing right there. I personally wouldn't take it because I love taking ABCD patterns after W shapes. I'm just trying to get to follow my A+ setups. But remember, when the stock is at all-time high, there are exceptions for it, because at all-time high, it's so rare to find a stock which is just simply downtrending. That will happen, but they are mostly strong, and you don't need to wait for an extra confirmation to get into those type of trades. So yeah, let's take a look at this last trade right here, and then I'll go quickly through the reversals I've taken today, the losers and the winners, in a minute. So Sebastian traded SQ, and you've taken SQ to the long side on the 1 minute chart. Now this, look at this, you took it twice to the long side, right? First of all, the entry is a little bit late. The stock is downtrending, it's not uptrending at this moment, at least 12:35, right? You could see here it's starting to drop down, and I know why you took it to the long side. You took it to the long side because it was really strong earlier on the day, right? It was strong there, and now it's finally trying to drop down, or it's starting to pull back. So it's the moment where you want to catch the end of the pullback to get into an uptrend, right? And remember, VWAP is not a technical level unless it's proving itself that it's technical level. Now look at the difference between the move here and the move here. The move here, it's going up, making a pullback, going up, making a pullback, going up, making a pullback, right? Now look at this move right here. Dropping down, making a pullback, dropping down, making a pullback, dropping down. Do you see that the trend has actually changed, right? It was making higher highs and higher lows. It's uptrending. It's starting to find the resistance right there, and now it's starting to drop. After a huge drop right like this, what do we wait for? We wait for a W shape. A W shape with the second low higher than the first one, or at least at the same low, just to make sure that it's not making a reverse ABCD pattern, right? Once it's breaking this reverse ABCD pattern, A, B, C, D, so now it's D. Once it's breaking it and going above the C, this is an indicator that we could take it to the long side. See this here? No W shape, dropping down, no W shape, and you're just getting into the fake highs. You're getting in for an ABCD pattern to the long side there, it's getting you stopped out. You're getting into the long side here, you'll get stopped out. And if it does the same thing again, you will get stopped out, unless you wait for a confirmation that the trend has actually started changing, and that would be your entry. So yeah, let's go take a look at my trades quickly. I'll show you the losers and the winners, all of them. So Roku, I traded Roku today. I did trade Roku. Where is Roku? Okay, there it is. This was my last trade today. I'll show you the bad management I did there. So first of all, the 5-minute chart, stock is going up, getting extended from the 9-minute on the 5-minute chart, waiting for a parabolic reversal. I see that it's making a fake breakout right there. I take it to the short side and it's getting me stopped out. My stop loss is never the wick. It's usually a little bit above the body. I see that it's making another fake breakout, a double top on the 1-minute chart. I'm taking it to the short side. Stop loss a little bit above the body, and I'm starting taking partials. What's the rule I broke right here? Once the stock is making a new 5-minute low, my target is the 9 on the 5-minute chart. Once the stock is making a new 15-minute low, my target is the 9-moving average on the 15-minute chart. So I managed this trade so bad. WKHS, I took it earlier in the day. On a new 1-minute high, stock is dropping down, extended from the 9 on the 5, being called out on the scanners, fake breakdown right here, taking it to the long side right here on a new 2-minute high after a hammer as confirmation. Stop loss a little bit below the wick. The previous week was used right there, and it's getting me stopped out. It did work out eventually. The entry was a little bit early. If I used the low of the week, I would have survived this and I would have got the risk to reward which I wanted. But most of the time, these trades work for me with a tight stop loss. So I'm not mad that my stop loss was really tight in this trade. Now let's see what else I've taken. NIO. Same thing. NIO dropping down, extended from the 9-moving average on the 5-minute chart. 2-minute chart, confirmation candle right here, taking it to the long side, stop loss right below the body, and this is horrible. First partial was at 11.05, which was a decent risk to reward for me. I don't know, my stop loss was around 3 cents. Yeah, it was 4 cents stop loss for me, and it made a move to 11.05, which was around 3 hours for me. I took a partial, and there was no reason for me to exit. I have no idea why I did that, and look at it. It's never touching my break even, and it's just going up. Bad management again. I don't know, today I traded really bad. UAL, I've taken 2 trades on UAL, same thing, drop down, extended from the 9-moving average on the 5-minute chart, fake breakdown right there, a new 1-minute high, taking it to the long side, and I get stopped out because my stop loss is right below the body. Re-enter one more time. This time it's working fine. I take my partials, but a little bit early partials, right? My stop loss is down there, it's never touching my stop loss, and I should have just held it to the 9-moving average in the 5-minute chart, which I didn't do there. VSLR, same thing, extended from the 9-moving average on the 5-minute chart, right? It was called on the scanners. Now, my mistake right here is that it did a fake 1-minute low, and I went for the second fake 1-minute low. When I see that the stock made a fake 1-minute low, I should wait for a new 2-minute low before I take my entry. Took it to the short side. For the next time, it worked out a little bit, but didn't work out really well. If I held onto my rules right here, which I should have done, I would have been stopped out on this trade for a loser, which would have been really fine because UAL would have been a good risk to reward to me. Roku would have been a good risk to reward for me if I held to my onto my rules. NIO would have been a good risk to reward for me if I held onto my rules. This would have been a loser for me, but that's totally fine. 3 good trades, 1 or 2 losers, nothing to be mad about. And I guess that's it. NIO, I went through NIO, right? I'm not sure if I went through NIO. Yeah, that's it. So yeah, NIO, Roku, UAL, VSLR, and WKHS. Those are my trades for today. That's it for today, guys. Ivan, what is the scanner alert you look for in reversal? It's the multi-strategy scanner. Let me actually show you that scanner and where you can find it. I'll open the chat room so quickly. Scanner, scanner, scanner. Going into the chat room. That's it, guys. Waba. This is getting loaded right here. Okay, so this is the BBT scanner. I guess you see it, guys, right? So this is the scanner right here, which I usually look at. VSLR was called right here, WKHS was called, RUN was called, and after that we had no calls so far, but this is fine. Having a few alerts which are actually working out better than having bunch of alerts from which you need to skim and scan and then just get chopped out on, right? Few alerts, and I guess most of them worked, right? Let me see RUN. I didn't see RUN. Let's close this. Yeah, RUN. There it is. It was called somewhere right here. The drop down. It did work out, but it wasn't the perfect step. I mean, it was the perfect step here. I might have taken it to the short side somewhere down here, and I would get stopped out. It did eventually work out, but not immediately. But yeah, so that's it, guys. Thor is going to be, or Thor is already, I guess, on the microphone now in the chat room. Have a good day, and we'll meet next time here on Thursday. I'll be in the chat room now, and bye bye. Guys on YouTube, if you have any questions, feel free to email me at ayman@beardbowtraders.com. We'll be here next time on Thursday, same time, 12 p.m. Eastern. So yeah, have a good day. And I'm finishing this.